Good afternoon, people. It is Wednesday, March 18th, 5 p.m. Markets closed about an hour ago, and I wanted to get this video out. It's going to be an interesting video, I think. I'll keep it brief, but for those who know me and for those who have been following my videos, you know how I always like to reference The Big Short. Many times I go back to that movie and the quotes, the lines, the situation. And I think I'm going to devote the whole video today to The Big Short, because I watched it the other night again for probably the, 50th time. I just was in the mood to just kind of decompress and just watch it. And that's what I did. And my wife always says, this is like your favorite movie. It's not my favorite movie per se as a movie, but it is probably the most relevant movie right now that I can think of, and has been for a while. So as I was watching it the other night, I was just listening to some of the lines in the movie and the setup, and it's just uncanny if you ask me. And the first thing I'd like to mention is there's Brownfield Fund, right? And it's Jamie and Charlie, okay? And they started out with $110,000 of their own money, right? And they saved that by taking boats up the East River or whatever, and they turned their $110,000 into $30 million, right? Brownfield funds. And their investment thesis was simple, right? People don't like to think of bad things, so they underestimate the likelihood of them happening. If that isn't what's going on right now, people, I don't know what is. People don't like to think of bad things, so they underestimate the likelihood of it happening. I think we're seeing that all around us. This virus is exploding. It's global. It's a pandemic. The markets are crashing, right? And people are still not taking it serious. They're still not changing the behavior. They might have to be forced to change the behavior. See, they are underestimating the likelihood of what really could happen. It's just human nature. And that's how Brownfield Fund turned their $110,000 into $30 million. Because whenever they bet, if they were wrong, they lost small. But when they were right, they won big. And that is what's happening all over the place. Then I'm watching it, and they talk about these CDOs, right? Which is basically a bet on a bet on a bet on a bet. High leverage, right? And they talk about this hot hand fallacy, right? This analogy of somebody in basketball, right? He's making all the shots. And everybody thinks, he'll just continue to make all the shots. That how it will be, it will just go on like this. Like we can always just print money. The Fed will always bail us out. The stock market will always go up, okay? That's the classic hot hand fallacy. And up until just a few weeks ago, that was the mentality, okay? Recency bias. It's going up. It's been going up. It's going to keep going up, right? That's how it is. It's just human nature. The hot hand fallacy. Oh, then I'm watching, and then there's Mark Baum, right? And he has a brother. His brother ends up committing suicide, right? And the brother reached out to him for help, right? And Mark Baum, what was his first instinct? He gave him money. The brother ended up jumping off a building, right? Mark Baum, I don't like to talk about that. Then finally, as the movie goes on, he breaks down. He finally, in tears, he's finally willing to talk about it. And he says, he came to me for help, and I offered him money. That's what the government is doing right now, in my opinion. They're just throwing money at everything. Pretty soon, everybody's going to get a check. They're just giving us some money. as if that's going to fix the problem. The guy is ready to jump off the roof. Here's some money. Here's your $1,000 check. Go to a restaurant. Spend it. Are they kidding me? They're just going to give everybody money as if that's going to fix it. Everybody is going to get bailed out. Airlines are going to get bailed out. Cruise ships are going to get bailed out. Hotels are going to get bailed out. Workers are going to get bailed out. Everybody just gets a big bailout, right? Let's just give everybody money and that'll fix the problem. Well, how did that end up in The Big Short? The guy jumped off the roof and ended up in some garbage dump, right? You should have saw his face. It was so crushed. That's what's happening here. Money is not going to fix this problem. It's only making it worse. I got notes all over the place. I got so many notes. I don't even know if I'm going to get to all this. I'll be honest. Then there are people here that are saying, this isn't the time to worry about finances and financial stuff and the economy. This is the time to focus on your health. And that's all true. It's very true. I can't, of course, I agree with that. But what some of these people fail to see is that the economy has a big impact on your health. And I'm watching this movie, right, again, and Brownfield. They were small potatoes, these Brownfield fund, right? But they're the first ones. They decide they're going to short the double A's, right? And they're getting like 200 to 1 payoff. And they're in Vegas, and they're going around everybody making a deal. We want to buy the double A. And people are like, what, are you crazy? I'll sell you all the double A's you want. What's going on here, guys? What's the game? Right? And they unload, and they get all these double A's, right? Because nobody ever thought the double A's would crash, all right? They thought the triple B's and the double B's and the B, they thought, oh yeah, that will fail. But nobody ever thought that the top level, supposedly, that's supposed to be 100% credit worthy, is really basically zero. And it's dog crap, right? And as they make this deal, they're dancing in the casino, woo, 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 ah, right? And then Ben Rickard, right? Brad Pitt, he plays Ben Rickard. He's like the retired Wall Street trader. He made a lot of money. He doesn't want anything to do with Wall Street, and he was helping them, right? He was helping them be able to make the big time, right? And he says, stop it. What are you doing? He says, what do you mean? We just made the biggest deal of our lives. He says, yeah, just don't dance. He said, do you know, for every time the unemployment rate goes up 1%, 40,000 people die? No, we didn't know that. Yeah. People are you just bet against the U.S. economy. People are going to lose homes, he says. People are going to lose jobs. People are going to lose pensions. People are going to lose savings. Every 1% increase in the unemployment rate, 40,000 people die. Did you know that? They're like, no, we just got scared. So you can't necessarily separate health, which obviously is the most important thing, than the economy. Because if people lose jobs, right, they lose access to maybe health care. They lose access, right, to food, okay, and medicine, okay? So don't forget that, all right? There's so much more. I mean, there's so much more. Then there's Michael Burry. Now, he made the first one. He makes this huge bet, like $1.3 billion, right? He's in there early, okay? And as everything is deteriorating, right, he's got these credit default swaps, and they're not pricing them right. They're basically insurance, right? And as things get worse, what he holds, the insurance, should be going up in value, all right? But instead it's not. And he can't understand why. It's like gold and silver right now. Gold and silver is the perfect insurance. But right now, they're not going up. And he's on the phone with Goldman, and he's like, and they're like, these are very complicated markets. It's not all correlated. And he's like, it is correlated, all right? How could the insurance, okay, that protects against the underlying instrument, How can that be going up when the underlying instrument is deteriorating? He's basically saying they are correlated. All right, and that's just like gold and silver. Okay. So I mean, there's the paper market and all the shenanigans that they're doing, and the margin calls. Okay. And the ones that just got to get out at any price. And then there's the physical market. Is the physical market going to assert itself? Maybe, maybe not, people. I really don't know. I really don't know. And then it goes to the other line with Brownfield Fund. When it's same thing. They don't understand why aren't they pricing these bonds right? And he's like, well, it's like 2 + 2 = fish. Right, he says. Let's go to the press, right? That's what's going on here with gold and silver. It's like 2 + 2 = fish. Okay, let's go to the press. Okay, and they go to the press, and the Wall Street guy, they go to see their old buddy in college, and the guy, he's like, yeah, I'm not gonna risk my job on a hunch. Okay, how many times have we been saying this with the paper markets in gold and silver? It's like 2 + 2 = fish. Oh, then Brownfield Fund, they finally get rid of, they want to dump their money, and they got Ben Rickett, and he's in like London, or he's in somewhere in Scotland or Ireland, right? He's in like this bar, and he's about to sell like $90 million. He's got a little hookup in a bar, right? And they hear him say, and somebody in the background sitting at the bar, he says, no, are you a drug dealer or are you a banker? Well, if you're a banker, you know what, right? And I'm saying to myself, yeah, that's right. That's right. If you're a banker, right, you know what? These banksters that have caused this whole problem, the banksters, they're going to get away with it. They're going to blame the virus, but they're the ones that caused it. Greenspan and Yellen and Bernanke and Powell and Draghi and all the rest of them. These banksters, remember that. When all is said and done, they're the ones that created the problem. They're the ones, okay, that created the bubble. There's so much more. I got all these notes all over the place, right? I don't know. I guess maybe I'll just stop there. At the beginning of the movie, though, it's interesting, right? The very first line, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. And I see that all over the place here, people. People think they know for sure, okay? It's just a cold. Young people will be okay. It's only through saliva. Stocks will come back. Now that's what I'm hearing too. See, last week it was, well, are we going to have a V-shaped recovery or are we going to have a U-shaped recovery, right? Then all of a sudden, like deers in the headlights, they realize this ain't going to be no recovery. Now it's like when this finally ends, the economy is going to come back so strong, so quick. Oh, really? Says who? Is that what you know for sure? Is that really what you know for sure? You better think about what you think you know for sure. Okay? That's all I'm going to say. Because it ain't what you don't know that gets you into trouble. It's what you think you know for sure that just ain't so. I'll leave it there, people. If you haven't seen that movie, I suggest you do. I got so many more notes on it, but you know what? Maybe another day. Anyway, gold and silver, once again, I mean, silver's getting crushed. Absolutely crushed. Okay? And they're going to try to do everything they can to keep this market up. You see it today. Dow was down 1,300 points, but at the end it came back. They started to put money. I told you the other day, they're not going to let this thing go gentle into that good night. They won't. Anyway, stay well, people. It's a beautiful day out there. I'm going to go for a walk. I think that's one thing that people should do more often. Get out. Get in the fresh air. and just go for a walk, okay? We can still do that, all right? And it's so beneficial in every way. So that's it, people. Stay well. Ciao.